Yeah, the stock split has the shares in focus here today. And sometimes, typically, when you go into a stock split, the hype is already there going into it. But this one continues to move higher, just below all-time highs on a split-adjusted basis are going to be about $123.10. So we're just below those levels. Option volume has exploded today now that the retail trader or maybe the smaller account size trader has the opportunity to trade this name, not only the shares, but in the option market also. If you look at some of their results lately, they've grown revenues 98%, tripled year over year, 87% of their revenues from the data center chips. They just announced another new chip for AI chip that's going to be available in the fall. And you got to remember, they actually just released another one, the Blackwell, that's not going to get shipped until the fall. So, yeah, a lot of innovation going on with this company. Now that the shares have split, does this, give you that path for Nvidia to get into the Dow Industrials also during maybe the next rebalance? I think maybe that's part of the reason maybe Nvidia split their shares and along with the fact that they want more retail traders and their employees to have access to those shares. So a lot going on here with Nvidia today. Compound annual growth rate expected to be between 35 and 40% over the next 6 years, Nicole. So yeah, a lot on the plate here. We saw some call buyers coming out in full force today after the stock split. Call volume is about 4 times normal daily average volume that we've seen over the last 5 trading sessions. And one that stuck out to me was out in the June 21st monthly cycle that expires in 11 days. Saw a lot of volume on the 120 strike calls. And this was early on when the shares were lower, too. They were scooping these up when the stock was down right on the open. They bought over 25,000 of these early on. Average debit of about $3.80. So that break even of 123.80 over the next week and a half. That's less than 1% above the current share price in there. And as I mentioned, really massive call volumes in there today. Over 1 million calls have traded in the session.
Before it split, Nvidia stock soared to about $1,200 a share, up 287% since the chipmaker's extremely impressive May 2023 earnings report kindled generative AI fever. Now that the stock is trading for less than $200, investors are wondering if it'll ever return to $1,200. And, according to Peter Cohan, the founding principal of Peter Cohan Associates, a management consulting and venture capital firm, this could happen sooner than we think. In today's video, we're going to explore the $10 billion catalyst that Cohan expects will send Nvidia stock to $1,200 again, and talk about whether investors should buy the stock because of that. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Vivek Arya, BofA Securities Senior Semiconductor Analyst, joins us now with a buy, of course, on Nvidia and a price target of 150. I guess the question is, after this stock split, if you're sitting at home wondering if you should be buying Nvidia after a more than 200% run-up in the last year, is now really the right time?
Thank you. Good morning, Sarah. Thank you for having me. I think let's discuss why this is happening. So we think Nvidia is on the right side of 3 very important mega trends. Number one, the computing industry has discovered this very important new technology called generative AI or large language models. You know, it's like discovering fire, right? That you have this new technology that can help you extract a lot of insights from data. But the thing is that the size of these models is exploding. They are doubling every 6 months. We are up to 2 trillion parameters. And I don't think the computing industry will rest until it gets these models to the size and accuracy of the human brain, which is 100 to 150 trillion parameters. So that's number one, complexity requirement growing. Number two, you have a race between the large customers, right, the cloud service providers, to upgrade their infrastructure to this accelerated way of computing. We are still in very early stages of doing that. And then number three, every boardroom, every CIO, right, every CEO of every enterprise company is talking about how we can incorporate more AI into our business framework, but they can't send their data to the cloud. So they have to develop their own AI infrastructure, and every sovereign country is thinking about the same. So we think NVIDIA is on the right side of all these three trends, and that's why we think that the stock can continue to do quite well, because even at this point, despite the run that it has had, it is trading at a lower multiple than the day ChatGPT was announced, and it is trading at less than 1 times its earnings growth versus the S&P 500 that's trading at 2 times earnings growth.
Cohan says that, in an optimistic scenario, if Nvidia stock keeps rising at the 287% annual rate it enjoyed between May 2023 and June 2024, the company's post-split shares could top $1,200 sometime in 2026. This would make the stock tenfold and send the company's market cap to around $30 trillion. This is a very optimistic estimate and needs a really strong catalyst that will fuel this growth. And Cohan says that sovereign AI will be the $10 billion catalyst that will propel Nvidia stock to new heights. Governments in Asia, the Middle East, Europe, and the Americas are buying a great amount of GPUs as they build domestic computing facilities for AI, according to the Wall Street Journal. These countries are spending a lot of money because they want to develop sovereign AI by training large language models in their own language with citizens' data, and the Wall Street Journal wrote that underlying this imperative is a quest for more strategic self-reliance amid rising tensions between the US and China. Of course, this is great news for the AI market leader, Nvidia. Last month, the company even said that it expects sovereign AI spending to account for $10 billion in 2024 revenue. So, if demand for sovereign AI continues to increase, such spending could help Nvidia to diversify its revenue sources. There's no denying that many countries around the world will continue seeking sovereign AI. The global AI in governments and public services market is projected to expand at a compound annual growth rate of 16.9% from 2023 to 2030, reaching a value of $51.78 billion that year. Nvidia already has 90% of the AI server market, so it won't be too surprising if it ends up capturing a massive percentage of the sovereign AI market as well. Additionally, Angelo Zeno, an analyst at CFRA Research, said that this revenue stream could help Nvidia continue to profit from the AI boom. He even told the Wall Street Journal that sovereign AI is a new lever out there in terms of generating higher revenue. But, even though he mainly focuses on sovereign AI, Cohan points out 3 more Nvidia growth drivers, and we're going to walk you through them right now. Hello everyone, and welcome back to Investocracy.
Vivek, you're making a lot of the arguments that Jensen Huang has made for a while. I do wonder, I know you don't necessarily cover enterprise software, but are you and your software desk talking about the degree to which NVIDIA might co-opt a big part of that industry?
Yeah, I think there are 2 different things, Carl. So first of all, with every industry, there are these different cycles where there is a cycle first of a lot of upfront hardware deployment. And then over time, the software industry catches up and takes advantage of that hardware deployment. Right? This upfront hardware deployment tends to go for the first 3 to 5 years. I think we are in kind of the second year of that upfront hardware deployment, and NVIDIA is leading the charge. But I do think over time, the monetization of this over time, I think that's where the software industry will absolutely be involved. So I see this more as a cyclical issue as opposed to a structural issue.
In addition to sovereign AI demand for NVIDIA chips, other drivers of NVIDIA's growth, according to Cohan, include the company's expectations beating Q1 results and forecast. In Q1, NVIDIA beat expectations for 237% revenue growth by $1.78 billion and reported a higher-than-expected gross margin of 78.4%. The company also forecast 197% revenue growth for the current quarter, exceeding analysts' expectations. If NVIDIA can continue to grow and exceed the expectations of analysts, which is very likely considering that the company is coming out with its new Blackwell and Rubin GPUs soon, then it could definitely sustain that growth into the future. Additionally, Nvidia's aggressive pace of new product introductions will drive future growth. Cohan uses the company's upcoming Blackwell GPUs as an example for this, as Jensen said that they will generate a lot of revenue for Nvidia in 2024, along with the company's fast-growing InfiniBand line. Still, Cohan points out that Nvidia's 427% increase in revenue from cloud service providers, which accounted for $22.6 billion in revenue, could slow down in the future thanks to these cloud companies building their own chips. But, fortunately for Nvidia, demand from sovereign AI customers could help offset the slowdown of GPU demand from cloud companies, if that ever happens. Finally, Cohan says that Jensen Huang's world-class leadership is one more reason why he thinks Nvidia will see significant growth in the future. He thinks that Jensen's ability to introduce and sell industry-leading GPUs while surfing new waves of demand is exceptionally valuable, and the company's ability to sustain expectations. Beating growth depends on him remaining CEO. With all of this in mind, is now the time to buy Nvidia stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, you've made the case, and a lot of people are bullish. Do you worry just about the sentiment? First of all, it's turned around and is now higher this morning. It's so hot. It's so consensus. It's the best stock in the market. It is more and more of the market. The CEO is signing women's shirts. Like, do you worry about that kind of stuff?
I think those issues always have to be, right? These stocks move because of fundamentals and because of sentiment. I think you have captured the sentiment. It's a very well-owned stock. But a few things that we find in our research is that if you actually look at the stock's ownership among large institutional buyers, they are essentially market weight on an average, right? They are not overweight the stock. They're essentially market weight, right? That's number one. Number two, on the fundamental side, as I mentioned, stocks don't move up and down just because of sentiment. They move when the size of the market is growing and when the company is executing extremely well. And I think that's where Nvidia is checking those two points very.
Certainly, Nvidia stock gained a lot of attention from the market after it split. According to S&P Dow Jones Indices senior analyst Howard Silverblatt, a stock split is a vote of confidence from management that the stock will hold its value, as the stock price typically increases. On the other hand, Winthrop Capital Chief Investment Officer Adam Coons expects the split to boost retail investor interest, but cautions that an influx of retail traders could trigger volatility for the stock. But this isn't entirely a bad thing, according to Evercore's Julian Emanuel, who sees increased volatility as an opportunity to buy Nvidia stock, a stock he sees as a generational investment opportunity and this era's marquee tech stock. He wrote in a recent note that while high-profile splits have often fueled stock volatility thanks to speculative buying and profit-taking around the event, thinning the trees within the forest post-split catalyzes the buying opportunity for the patient investor. Historically, stock splits are typically bullish for the companies that do them, with average returns 1 year later of 25% versus about 12% for the broad market, according to Bank of America analysts. Bank of America is extremely bullish on Nvidia stock, as it raised its price target for it to $1,500 recently. The analyst behind the call, Vivek Arya, said that we are at the start of what he thinks would be a decade-long conversion to accelerated computing, adding that the spending on it could be anywhere between $250 to $500 billion a year, and Nvidia is leading the charge. So it might be a great idea to buy Nvidia stock now that it's trading after a stock split. Of course, Cohan's forecasts for Nvidia are very optimistic, as the stock rising tenfold would send Nvidia's market cap to around $30 trillion. And we just can't see this happening by 2026 like he expects.
That's what she said.
However, Nvidia's impressive technological advancements and presence in many different rapidly growing markets solidifies its position as one of the AI market's most important players. And Nvidia stock will remain a great investment whether it reaches $1,200 again or not. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comments section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.